All right, thank you everybody. Hope the day is going well. Thank you to my panelists. We have quite an all-star group with us. Many of my friends on the panel I know personally. Many of us have been on panels before in the same very room and around the world. I respect each and every one of you. Did we lose it? Did we lose it? Can you hear me? Oh, I can't hear. Okay. I respect each and every one of these guys for the work that they've done. As you can see, we're from 5 and 6 different, almost completely different parts of the industry. So it's going to be an exciting one. So we're going to keep the topics just kind of rapid fire. We're not all going to answer every topic. We're going to leave some time at the very end for the questions because we're all from different aspects of the industry. So just a little bit about us. My name is Kevin Soltani from GIMA Group. What we primarily do, we were the first California miners to deliver customized mining hardware, and we sold that division in 2013, back in the fun and exciting days of crypto. And we moved on to be growth advisors, where we help over 25 startups find funding in the 8 figures and above to help them grow their IP around the world. Our passion is mixing blockchain with other industries. So we own and operate one of the most successful esports teams in the world. We just were in Berlin for the World Championships of the League of Legends. And 2 of our clients are actually mixing esports and blockchain together, which is what I meant by mixing the 2 industries, because that's what it's going to take for mass adoption, which you'll hear from my panelists moving forward. So moving forward, let's just get a quick intro from each of my friends here, and then we'll go into the fun stuff. Tobias?
Thank you. My name's Tobias Young, but I generally go by Toby. I work for the Dubai Gold and Commodities Exchange as Head of Product Development and Strategy. As you can see, we're all sitting on lovely gold chairs today. I would like to say that we sponsored them. Unfortunately, we didn't, but thank you to the organizers for making our chairs gold.
Thank you, Kevin. My name is Mru Patel. I can claim a bit of this because our logo is gold, if you see Xcoin. But I'm the president of Xcoin. I'm around everyone's necks as well. We are the world's first digital options trading platform, and we've broken all sorts of records. People dream about doing 100,000 transactions a second. We're already doing it. We're already trading, and we are pegged our coin against USDT and USD. So our coin USD is the world's probably very few stable coins with tried, tested, proven operations for trading in the futures market, and look forward to having a fantastic debate.
Hello, everyone. My name is Jason King. I'm the CEO of CGS Group. We are mainly focused on doing trading, investments, education, and also consulting in the cryptocurrency space. I myself have been involved in this space for the last decade, aiming to really help people navigate the complicated space of crypto, and meanwhile, and also involved in many other companies, but just going to stick to that, and looking forward to have a great discussion with everyone. Thank you.
Hi, I'm Ming Chan Shu. We at Connect Blockchain, DMCC, we are the 3rd licensed proprietary traders for the crypto commodities. My background, I've been in DGCX, my ex-colleague, Toby. I've been there, I've been here for 12 years, and what we do is we market make for projects. We market make in the traditional exchange, such as Chicago Mercantile Exchange, where we are the market makers for the metals contract, and at the same time, we are market makers for a Singapore exchange called Asia Pacific Exchange on the fuel oil contracts. Yeah.
Good afternoon, everyone. My name is Gabriel Abed. I'm a founding member of a company called Bit.com. We were the first company in the world to create the concept of central bank digital currencies, and we work with several central banks around the world to create national digital dollars.
Awesome. As you saw, as I said, we're from very different backgrounds in the crypto space, all respective to one very main piece in our each respective categories. And we're going to get to each of those, but the topic for today's panel is the global state of crypto markets. So that's pretty broad, right? That's quite broad, whether it's going to be the STO pop-up, which is the new craze, or how we're going to raise money moving forward, and what is the general state of crypto markets. So that's the first general question. I'm just going to throw a toss-up to not any of specific of you, but the markets around the world are very different, and they're shifting right in front of our eyes. You see regulators in certain countries making really nice headway, and then in other countries, they're still lagging. So the crypto global state, what does it look like for any of your respective countries, and what does it look like next year? If it's moving fast, or if it's one of the laggards? Anybody?
Do you mind if I jump in
Go for
first? So the DGCX is a regulated exchange, and we're regulated by the Emirates regulator, which is ESCA, Securities and Commodities Authority. What we've seen in terms of regulation, certainly within the UAE, is we had the ADGM guidelines through the FSRA, the regulator for ADGM, come out about a year ago. But last week, ESCA produced their equivalent regulations for mainland UAE. Yep. Now, I think that is potentially a game changer in terms of allowing people to access or create crypto markets. What that does necessarily for ICOs, STOs, IEOs is probably a completely different conversation. But in terms of regulation, it seems that the regulators, certainly within the UAE, and when we look regionally, say Bahrain, for example, are looking to try and bring cryptocurrencies or digital assets under an umbrella where ultimately the investor is protected. And I think that's something that everybody on this panel would like to see, is investor protection. Now, I know everybody here, and I can say everybody runs a tight ship, regulatory compliance, looks after and segregates client funds, but there is people out there that don't do that. So for me, for the DGCX, that's something that we need to see before we can build on the ongoing strategy. These regulations in the region need to be worldwide regulations as well, and there needs to be equivalency between the different regulators to understand each other's business and industries.
Yeah, I want to throw it over, was a topic for later, but it almost segues perfectly into what Gabriel's doing and what you've done in the aspect of like working with the regulators on a much higher level on the central bank side. I've never seen an idea, a business, or a person been able to marry government and the people on the ground and keep both happy. And I'm going to let him get into that. But that segues very quickly about the regulations at a high level, if you want to speak about that work on a central bank level.
Sure. So, as I mentioned, what BIT does is we digitize central bank currencies, and we allow that to become a more conducive form of financial inclusion in society. Now, the reason that's important is because it touches all aspects of society. You're not just working with regulators, you're working with the government to provide an e-governance service, but you're also touching the merchants and consumers on the ground. Because by creating this new evolution of currency-based systems, you're providing a solution that solves the unbanked parts of society. You allow people who have smartphones in their pocket to immediately become part of a global financial solution. And that's quite critical, because what we have been seeing over time is that regulation usually pushes people out of the fold and creates barriers to entry. But this type of technology and this type of evolution is doing the opposite. It's bringing persons into the fold, and it's creating an all-inclusive network.
Right, and I think that's never been more important excuse me, for the Middle East and the MENA region. So I know, Jason, you've been here in Dubai for a long time now, and you've been working with a lot of regulators, a lot of government officials. What do you think that looks like for the UAE specific and the MENA region for a central bank to get involved and bank the unbanked, which we have a lot of, and to help the banked even further?
Well, I think from a global perspective, if you really think about what's happening in the world right now, you're seeing, not to name names of central banks who are basically utilizing monetary policy as a financial weapon against the globe. I do see that the Middle East has an opportunity to rise as a new hub for global financial access and innovation. So in that front, away from the US, away from China, away from Europe, I think this is a very neutral ground for a lot of innovation to come in the years. And that's why one of the reasons I've moved here from the US is to really look for a way how we can innovate the space to bring the world a better solutions and various things.
So obviously it's an extremely hard process. You were able to get it done in Barbados and the Eastern Caribbean, the central bank. But in this part of the world, regulations and things like that move a bit slower. They need to be a bit more cautious because of the GDP size and certain aspects. It's a toss-up question. What is the next place that you would see a central bank get involved? Is it the MENA region? Is it the PAC? Is it the APEX? Is it America?
Well, actually, there's a project happening called ABER between Saudi Arabia and the United Arab Emirates for direct currency swap agreements.
Correct.
And that is one of the steps towards digital and financial inclusion, because while it may not seem like much because it's central bank to central bank, what ends up happening is it opens the corridor to explore what a central bank digital currency looks like and how it works within that organization. And then that has a filter down effect. So what we did at BIT is we went from the ground up, and this is in essence from the top-based approach. So what you can expect is that most of the GCC nations are going to head in this direction because of the value benefits that a central bank digital currency will bring, not just to the central bank, but to the governments and then to the citizens. It's only a matter of time. And one of the regions that we may very well see take off with this type of technology is Africa, because of the specific issues within the region around connectivity, unification, financial inclusion. So this is very well, 2019 has been the year of central bank digital currencies. When we started this in 2013, central banks didn't want to hear the word blockchain. As a matter of fact, most people didn't. But now, fast forward 5-6 years later, this topic has blown up, and all central banks are looking at blockchain technology and the advent of central bank digital currencies. One way or another, it's happening, and it's going to come, and it's going to come fast. And projects like Libra are going to force the hand of central banks to innovate, because if they don't innovate at the organizational level of a monetary authority, private corporations are going to provide the innovation which provides a better service for the consumer on the ground. And that's what we're seeing today.
Right, and let's just segue right into that. Obviously, let's just say a show of hands, because who has heard of this initiative between Saudi and the UAE? Really has read and heard of it? Yeah, so you got about 10% of the room, and it's one of the largest initiatives, and it's going to be very impactful, and it's going to happen, and it's actually going to be very successful because of the way they're able to implement it, not just from their brotherhood of cultures and society, but it's a no-brainer if you look at it from their financial aspects. But let's segue away from that, and you said Libra. So, Ru, what do you think about? Obviously, this has been a big week or month for Libra. A couple, I wouldn't call it bad news, but news came out, and we all have our opinions on that. This is one topic we're all going to talk about. But to start with you, thoughts about that being in the news?
I've worked in the Silicon Valley as well, so I'm used to a lot of this. I've been through the .com and Java days. And it's interesting what Gabriel was saying as well. But last year I came and saw the DIFC and also the ADGM people because we wanted to launch a full-on digital bank with an all-in-one smart card, with an exchange and everything. They said, yep, it was released last June, I think. Nothing happened. And the Middle East region, I think, is missing out. Whilst I'm a big fan of it, sorry to be contradictory here, and sorry to say that you want to be the blockchain capital of the world, you have everything going for you in the Middle East, yet the execution is a slowly catch a monkey kind of a strategy. So take things to Libra now. It's exactly what I was saying last year, what we're building, and we've already built it, by the way. So what's stopping you? It's the governments and the regulations. Unfortunately, whether we accept it or not, the banks, the central banks, dare I say it, USA clearing banks, come in and interfere and say, hang on, if you clear Mr. XYZ or ABC Company Limited's transactions, we won't do any of your clearances globally. So that's where you get stuck. And I don't call it blackmail, but it is, in a way, blackmail, right? And let's just call it. So it needs some big, powerful governments to stand up and say, you know what? Screw the world. We are going to make a difference because it's good for the community, it's good for banks and unbanked people, it's good for society, we can bring in more social responsibility, we can do all of these things if we just give the people what they want. You know, the time has come where people should get what they want.
I just have
Yeah,
something
I was
to add.
gonna come to
yeah,
you, Ming, and-
I just have something to add as well. I think the Libra thing literally sparked a lot of interest at the beginning. In fact, that is one of the catalysts that brought central bank to be extra careful and having the more awareness on what's going on in our dark side, so-called. We are one of the 1,600 applicants of the Libra notes. And, you know, I would treat it as a good news because now they're calling us. Months ago, we didn't receive anything. We just sent radio silence. Now they're calling us, and we are talking about different things, different packages. So we'll keep you informed on that.
So, sorry, I'm just going to add something in. We've got an audience of people here. I'm sure everybody uses social media. How many people trust Facebook? Anyone? Anyone actually trust Facebook? And I think for Libra, that for me is going to be the biggest stumbling block. We've already seen some of the announced founders pull out, and Facebook said, it's okay, we've got 180 more behind it. That's great, but nobody trusts Facebook. So why are they going to trust a currency, the most valuable thing that people own, to Facebook? I think what we'll actually see, and I think Gabrielle's right, we will see central banks take up the mantle.
Correct.
But the central bank mantle will be to create their own digital currency, whether that be a cryptocurrency or not, but it will see the use of cash removed from society. And the chances are that every transaction that we make will be tracked, traced, and what all the governments want at the end of the day is taxed.
And also, if I can add, you know, I mean, if you just think about the early days, and I was fighting against Bill Gates on stage against this, where you had everybody, or 99.9% of people having Microsoft, and everything was just Windows. No competition. You go into any industry in the world, for fridges, cars, planes, you have some competition. Imagine now Libra was managed by Facebook with 2 billion, it would explode to 4 billion. You have the world's biggest monopoly for anything. It's not
How many
healthy.
fake accounts they have.
On a point that you mentioned of who trusts Facebook, and we saw the crowd, not a single hand raised, but the more important question is who uses Facebook
I
or
was
its
going to
services.
ask that right after.
So while we don't trust Facebook, many of us in here use WhatsApp, Instagram, and Facebook. And when we have learned this, the most important aspect of currency is its utility. And when they bring out this system, it's going to have a lot of utility, more so than 2/3 of the world's currencies. So whether we like it or not, whether the United States or the Federal Reserve likes it or not, a project like Libra, it's too big to fail. And we've heard that statement. But it's going to happen. And whether it's Libra or PayPal launching their own digital currency,
Google,
or
Samsung,
Visa,
they
or
all do it.
Google, or Apple,
They all do
what
it.
we are now going to see is the war of currencies starting. We have the currency of the people, Bitcoin. We have the currency of the monetary authorities and societies, which are central banking. And now we're seeing the rise of the currencies of private corporations. And because of the game of regulatory arbitrage, I don't need to set up in the United States. I could set up in Dubai. I can set up in Bermuda. I could set up in Barbados. And because of the advent of the internet, it transcends a single regulator and their ability to enforce regulation. So whether we like it or not, we're seeing the rise of private corporation money. And it's going to happen. And we need to accept that. Central banks need to accept that. And now it's a competition of who can build better utility and who can build a better end user product. And at the end of the day, we, the consumers, win.
So let's just go down the line. Will Libra succeed and become or not? Yes, I do believe it will succeed and become.
For me, no, there's too many regulatory obstacles. Already been partially denied in Europe, probably the US, UK are looking at it. Every single regulator is going to look at it and pass judgment. And once there's a groundswell of opinion, they're not going to be able to do anything with it.
For me, no, but they will still do it and see what they get out of it. Because there are so many jurisdictions out in the world, they will just license it over there and do what they have to do. Power to the people. That's their strategy.
Jason?
For me, I don't want to say yes or no, but interesting
Get off
enough.
the fence, Jace.
No, but interesting enough, I think, the whole concept, of Bitcoin starting in 2008 with Satoshi Nakamoto's white paper all the way to the first implementation. I think the moment that Bitcoin hit parity with the dollar, it was the start of a revolution. And now we are just in that process of world-changing events. I don't know what the world is going to be like in the next 10 years, but for sure, our children and grandchildren are going to be living in a different financial system in which I hope that we live in a world where money works for us, where we no longer need to work for money, because essentially what we have created over the last couple hundred years is a slavery system that has enslaved billions of people around the world who are living under $2 a day, and all these terrible things are happening because of the concept of money has been misused. And I hope that we embrace a new economic system where governments still will be around, but I believe the separation of money and state is absolutely critical, just like hundreds of years ago when we separated church and state. And the only way we can have our religious beliefs, we can have our governments who are supposed to serve the people, and we can have our money system, but these three things need absolutely to be separated, and that's how we can make the world a better place. So I don't know yes or no, but I'm all for whatever system that makes that happen. Thank you.
I think it's going to be difficult, but they will do it, and yes.
So for every one regulator that says no to Libra, 2 will say yes. Yeah. And the reason for that is if we look at things like the Bank of International Settlements, the bankers of bankers, look how many members they have and member nations. We're talking about maybe 60-odd member nations which control 95% of the world's GDP. That 5% of the world GDP that's excluded from this membership make up around 130-odd countries. When you have a basket system coming into a territory and offering way more advantages and tool sets that have previously never been available to that country, watch how quickly they sign up. So I believe Libra is absolutely going to happen. They have the firepower, they have the money, they have the manpower, they have the world coverage, they have the user base. And to be honest with you, I want it to happen. I want it to happen because while we all are here because of one main reason, immutability, the immutability that Bitcoin brought us. At the end of the day, Bitcoin isn't going to be the catalyst to lead the world into the digital currency revolution. And we need disruption in the financial markets. There's been too many monopolies before, and have been monopolies that have excluded billions of people from accessing financial systems. A project like Libra changes that concept completely, and we absolutely now need more than ever to watch what things like the internet did, which disrupted communication. We now need to watch the disruption of financial markets. And then furthering that, we have to understand and start thinking of the internet as a country of its own. Granted, it's not a physical country, but we are all citizens of that country. And there is no financial system that meets the needs of that country. Products like Bitcoin solve it, but they're not conducive for the everyday person yet. Projects like Libra open up the gateways. They open the floodgates to watch financial inclusion take a whole different foothold. And I want to see that happen for our societies.
Yeah, I agree. I heard someone say once, if Libra failed, it would be like decentral winning. And if it won, there would be so much adoption that the decentral guys wouldn't care anyway. So whether we're going to see it or not, I think it's too big to fail. I think that we'll see it happen within the next about 18 months. I don't think it's going to prolong that much longer. And I think that you said something really well about the 5%, that we forget that those 5% carry more weight than the other 95% in almost any sector, let alone finance or countrywide. Let's shift topics here again, because we have many topics that they've put for us that they're really good we want to talk about for the audience, and that's the next rise of exchange tokens. So we all have our affinity to each token. Everybody in this room has their favorite token, other than Bitcoin, which is technically the money of our system. But if you have a favorite token and it's attributed to an exchange, then you really have to be jaded to think that your exchange might last for the next 10 years. Exchanges are going to go down rapidly, as they should. Investors should put their money where their mouth is for certain exchanges, and I have my favorite. I'd like to hear just a toss-up question to anybody about their favorite. BNB, in my opinion, is going to be the winner. I think it's massively undervalued for obvious reasons. And I think because CZ's work as what he's doing and where it's going to go, I think BNB is going to be the winner. Anybody else have anything against that or with that?
Well, we've already seen about 70% of the exchanges closing down or gone by the wayside. I think the crypto and blockchain people, I'm going to say in a bad way now, we are the victims of our own successes. There are so many people who've never handled money in their lives building up exchanges, and that's why we've got so much bad press out there for these things. So exchanges, I was speaking to someone in Estonia just last week, and he says they've opened almost 800 exchanges in the last so many months. I mean, come on, it's a small place like that, 800 plus exchanges. So, and then you look at Malta, Gibraltar, Bermuda, you look at all these places where people are just building up, and Singapore and all these places. Exchanges, in my view, there's way too many. Tokens and currencies, even if Libra comes, I think there'll always be other currencies and tokens out there. Do we have too many? I think we do have too many. So, bottom line, I think it will rationalize. I've seen it during the .com and Java days, where you had so many people trying to fuel the currency side of the internet, because as Gabrielle was saying, we have internet, we have currency, now we can set the world alight and make it smaller. That was our vision 22 years ago. So, same with the tokens. You'll have so many of them come up, just like the .coms. You had so many .coms come up. How do you see them now? Facebook, Amazon, right? Same with currencies. There'll be very few, and they'll merge, and we'll have a better place in this world.
So, Ming and Jason, I know you guys are one of the two more exposed to the China markets and APAC markets. As far as your token for exchange token, any thoughts on that? It's specific to any one or in general?
Well, at the moment, I don't really want to speak about particular exchange tokens, but to add to that point you were talking, I would say from a different perspective, number one, if you look at crypto, not whether it's cryptocurrency or crypto token, this technology, I believe, is since the creation of the internet to the creation of the next meta application, whether it's websites, I think if you today look at crypto and this technology and sort of the wallets that we have these days, look at it as a browser for a new internet of money. And whereas I remember the first time I went on the internet, there was 7 websites, and the whole entire internet was literally, you could browse it in 30 minutes. And today, yes, we have the big websites, we have the big, powerful corporation, but there are the power for any individual to come and create your own little blog or your own little shop. It's there. There are millions of websites, and I believe in the future we are going to see millions of tokens and millions of cryptocurrency created by individuals. While they may not necessarily be dominant, but that's what it's about. It's about, Satoshi was just trying to show us, he's actually educating us, look, with Bitcoin, he didn't make it so that I want to be the one coin that dominates this entire world. He could, but he made it so that you can fork it, you can innovate upon this idea, and I think that allows us to have the space and this conversation today. We can talk about Libra, we can talk about Ethereum, we can talk about Ripple. All of these things are just manifestations of our ideas about a certain future, and I think that's what it's all about. It's about education, it's about teaching the future of our children, and that's why for me, if you ask me what business I'm in the education business for the last 10 years, whether I'm in a crypto hedge fund or I'm doing OTC trading or I'm consulting for people. You have to educate, and I think the education system today, the one biggest thing that I have not been taught since I was a kid is financial education. I think that has been left out purposefully. And what's to stop 10-year-olds from investing in their bedrooms with the advent of cryptocurrency into new emerging companies? Why do we have to wait 18 years to 25 to 30 years of our life until we are considered adults to be able to open up a bank account and to trade stocks? I mean, how many 10 years do we have in our lifetime? And I think it's time to change that to allow the future of our children to be able to get access to financial products at a young age and really start learning that. I mean, I see 4-year-old, 5-year-old kids already, very adept at iPhones and iPads. So I think it's important to radically shift many things, because at the end of the day, why are we all here? I think in the beginning it was for fun, but at the end, I think we want to make the world a fun place to live, not a boring, dystopian, ugly place where everyone's, fighting and arguing over stupid things. I think we want to make the world a fun place, and crypto was once fun, but I think as soon as, something becomes fun, people want to make it not fun. So I'm here to make it fun, and that's what it's all about. Thank you. Yeah.
Just to point back on the exchange tokens and exchanges mushrooming, if you look at the current scenario, fourth quarter of 2019, it's now still winter time. What I felt is, talking about the price movement and stuff like that, it's winter time and there's so many new exchanges coming on board. Whether it's winter or whether it's summer, no one knows. Yeah. In terms of the holding, I can't comment on the Chinese, but my personal holding would be still 95% on the big 5 tokens. Part and parcel of it, I felt that this market is, yes, you need a bit of flavor of speculative crypto assets, but at the same time, if you are doing it as a fund management, you gotta just put it on the index stock. It's more like an index stock. One of the things that I did for my family, I have 3 kids. Malaysian Chinese, normally we give the red packet during the Chinese New Year. And what I did is that I gave them, each of them, 0.25 Bitcoin. So it's easier for them to know what's the address, what is Bitcoin, for them to understand. It's not a big amount, but I'll continue to do it. Probably next 2 years, I'll be paying Libra.
So let me just, add to what Meng said. And I can attest to his red packets because he's given one to my child before. Unfortunately, didn't have 0.25 Bitcoin in, so I'll pick that up with you after. But with all these exchanges, there's thousands and thousands of them. Who's running these exchanges? Do we trust them? Are they really looking after people's money, people's assets? And I think that's something that we really need to address. It's great that we can open up the financial ecosystem, but we have to make sure the people that are controlling it can be trusted, and they will protect you. And at the moment, we're at a stage where we're not. And that's why I often talk about the regulation, the regulators, and why they need to step in to make sure that people are transacting in a trusted environment.
So what we're seeing right now is the barriers to entry being reduced from that of a regulated perspective. We're seeing jurisdictions like Bermuda, Estonia, Gibraltar, Malta, Mauritius, and the list goes on, of reducing the complexity of establishing a licensed and regulated exchange. So that's the first thing. I think the era of exchange expulsion is amongst us, and we're going to see many, many, many more exchanges launch and many fail. And we'll see the good apples rise to the top. But the next thing to consider is that every single thing you can look and touch in this room and beyond is going to become a digital asset. We are now in a brand new phase of financial systems where every single thing is becoming digital. The next thing to consider is that we have seen and are seeing the disruption of trust. I no longer need to trust you to transact with you thanks to the clearing and settlement of blockchain-based technology. Combining these 3 factors together, you're going to see a rise of these exchanges, just like we saw a rise of blogs on the internet. And to Jason's point, you're going to see many more of them from unsophisticated, unprofessional, young, amateur hour-based individuals. And what that is in essence going to do is provide more financial inclusion, more education, more adoption, and it's not going to stop. Because right now, regulators are fighting each other to build better policies, lower barriers to entry, and they're competing with each other to allow more and more of these exchanges to exist. And it's not something we're going to see go away overnight, unfortunately. And as a matter of fact, as someone who's been around the industry for as long as the industries exist, we've seen exchanges rise and rise and rise, and I've never seen as many as I've seen this year. Yes. Everybody's launching an exchange. Everyone can have an exchange. There's so much open source exchange software out there. I can launch an exchange within 24 hours right now if I wanted to.
Yes.
And that's the simple reality of it.
But Gabriel, is that healthy? Let me put my...
Yes, absolutely,
okay,
it's healthy because
here's
monopolies go away.
We've all
Competition drives innovation.
We've all said 90% fail. There are a lot of bad actors out there. Is it safe for the society? So we have to be more responsible. You said kids are coming in and opening in 24 hours, and a lot of them I see as well. Personally, if someone hasn't managed money or doesn't have a clue about what money and financial instruments and KYC, AML procedures are, and they switch on and want to be an exchange, a year later they disappear. Who is liable? There are no regulations properly done where they go in and legislate people and say, okay, I'm going to bang you up. And we need some policing, we really do. Otherwise, the industry will grow to an area where no one's going to trust us.
I fundamentally disagree with that. And I can say on the point of experience in the financial space, there was, if you look at me as an actor, I'm a technologist with a cryptography background, but yet I innovated central bank digital currencies. And we launched the first company in the world to invent the process, the procedures, and the concept of a central bank digital currency. But I had no right in the space of financial innovation. And many central bankers would have looked at me, as they did back in 2013, and they would have said, little boy, you don't have a reason to be in this room. You haven't earned your stripes. And yet, we innovated. And that is the case of many of our exchanges today, such as Binance with Changpeng Zhao, who has innovated and brought about a new world order of how these exchanges should thrive. And what we are seeing is more and more innovation. And what you're worried about, which I think you are right to be worried about, is the end user being burnt. But at the end of the day, they're being burnt because of lack of education, because we were never educated about financial markets.
I think it's lack of bad actors not being responsible. You, me, and a few others, we are responsible. We want to make sure we don't want to do things wrong.
But the good apples rise.
No, everyone's like that.
A few do get burnt, and they will get burnt. But what you will see in the end is a better system for all. Yep. And I think that's what's important. And regulation often doesn't care about the inclusion of all. It cares only about the protection, and that enforcement often hurts innovation. Innovation right now is what we need to drive the world forward, because we're seeing billions of people, as Jason noted many a time, billions of people left out the system, and they're being burnt. And at the end of the day, the 1% win. And the regulation that's established creates barriers that only they can access through. And I think that honestly needs to go away. And I'm not speaking against regulation. No, remember I said that I think that these jurisdictions are competing on a regulatory frontier and creating new ways of regulating. And I think we need to see that. But at the end of the day, to say that, hey, these markets are only for these people and these other people can't access it, that needs to go out the window.
Yeah, we don't want regulations for regulation's sake. We want to innovate, and the thing is, how do you control responsibility? That's the concern I have.
But that's the beauty about blockchain, is that built into this mechanism is not just settlement and clarity of that settlement, it's the ability to not have to trust. In mathematics, I trust. And that's why we're all in this room today. Because that evolution of in math, I trust, has allowed a brand new world order to exist.
So let's jump. I know, Jason, you wanted to jump in. Any final thought on that?
I need to add.
We need a nice debate.
The regulation, the regulators, I am for regulation actually, but it's at the end of the day, look at companies, look at government, look at any organization in the world. What is behind it? It's the people. So I think as long as you have good people behind these things, things will be good. Now the problem is, if you look at the SEC, now, fine, I think if you look at the recent events where they went after Block One and they went after Telegram, and Telegram clearly has the case where, to be honest, they did everything by the book, and yet they were still just kind of hammered upon. I begin to see that, look at historically, the regulator are supposed to protect the consumers. They always tell you, we need to regulate. Why? Because we need to protect the children and the woman. Okay, we need to protect society, but the problem is time and time again, they only come in to fix once things have been broken. Where's the protection? If that's the case, look what happened in DIFC. I mean, you have this one company, I don't remember which one it was, with a huge thing. Where was the regulator then? So why is it that after the fire, the house is burned down, then the fire marshal shows up and say, hey, you need to do this and that? Well, duh, like, where's the protection before? So I think it's not about, regulation itself isn't bad, it's the people who are in the seats, who are supposed to be holding the power, that is holding up the progress. So where we need to see is Bitcoin and crypto already has demonstrated, you know what, governments, banks, all the people sitting in power, the future, the children are going to be the new power. And these young generations are not going to sit around and wait because you have failed to do things for them. And I, growing up, didn't have that chance. So I think for all of us, we want to do it not just for ourselves, but do it for the future. Build a future where these people didn't do it for us. Why should we sit around? It's like you're sitting around waiting for someone to save you from a burning house. No, you put out the fire and you make a new future.
I think it's a mix between if it ain't broke, don't fix it, and if it's broke, how the hell do we fix it? So I don't think there is an answer, and I don't think there should be an answer. I'm the proponent of, like, let them do what they're gonna do, and let the bad eggs get burned, and let the investors who got in at the bad ones get burned, and the cream will rise to the top. Education is key. We've heard that from all 6 of us. Education is key. Without education, you're not gonna get adoption, and you're gonna get those bad eggs to continue to rise. And unfortunately, as we saw in that last little debate, is that you're gonna see that exact problem. It's like, who's gonna be the overriding right answer? And I don't think there is going to be one, and I don't think there should be one. Because as Jason and Gabriel and yourself, you just pointed out, is that the masses will decide. And the tech will decide via the masses if it's going to rise to the top. So look, we have about 2.5 minutes left. I think we should throw it out to the audience. Let's see if we got any questions for our panelists. Anybody? We got one right there and 2.
Does anybody have any questions?
Raise your hand again, yep. There's those 2.
Hi, Arina Heber here. As a retired lawyer who had the pleasure of litigating against SEC and DOJ, I will speak against the regulators, and I will speak against the regulators because our panelists were a little bit modest. So the regulators are here not to protect the women and children, but to protect the status quo and to protect the banking cartel. And if you think that the regulations are here not to prevent the competition from coming in, then I do not know what you had for lunch today. Now, when we're talking about too many exchanges popping up, Gabby, I'll agree with you 100%, and I'll just throw in some numbers. So corporate bonds, total market cap, $52 trillion US. Sukuk, $21 trillion. We have units in venture capital funds and private equity. I don't have a number, but be my guest and guesstimate the number. Then we're talking about the shares in companies, total market cap, $65 trillion. We're talking about property, $217 trillion. That's market cap that will all be digitized, tokenized, and traded somewhere. And where do you think it will be traded? On digital asset exchanges. You're saying there are too many of them. Where will these numbers go? They have to go on digital asset exchanges. So my argument, there are not enough cryptocurrency exchanges, digital asset exchanges to accommodate this huge number, which will be eventually traded on blockchain, peer-to-peer. So can you answer that?
Thank you. I think it's for me. So what I said is there are not enough, meaning, there are too many. I said too many in 3-4. If we carry on at this rate, we could have 1 million digital exchanges very easily. The world trades 7 trillion on a daily basis, if you look at everything. You mentioned real estate. My background is real estate. 217 trillion you mentioned. I think real estate plus financial banking is nearly 300 trillion market cap. So if you look at how many exchanges you need, most of these will have through the private equity, hedge funds, REITs, and all these, and they will trade in between. It's this trading figure we need to worry about. And why doesn't crypto work? Because works. So USDT now is trading more than Bitcoin. Why? Because you don't have the spikes and all that. And second thing, with 7 trillion a day being traded for any of those markets you mentioned, people need stability. You cannot have a 2 to 3% spike in a day. So need some form of stability to do that 7 trillion. So my view, the future exchanges, the more they get some stability in the trading in the currencies, you will get the high volume come up in digital crypto exchanges.
I mean, the stability will come, right? There's stability
Has
in
to come.
capital markets,
Has to come.
but we have not achieved that stability in capital
It's
markets
happening
in
slowly.
one day, right?
Yes, it's
So
happening
it will
slowly.
come eventually.
Yes.
And when that day will come, then we'll see how we'll work there. But my point is, you know, there's enough to play for everybody, and let's people come in and play. Let's good apples rise, and let silly people get burned. Because, I mean, if you don't do your home research and you lose your $50, well, the regulators aren't going to save you.
No,
because you know why? They did an amazing job saving us in 2008, did they?
And I can remember 1999, etc.
Exactly.
So,
You're a little bit
I've been
old.
there.
You're a few years older than I am, so
Thank
you
you.
can remember a few more times when the regulators did amazing time saving us, right?
Absolutely.
So,
No, but I've always said there are cartels.
My
because
point-
government, banking,
so the
each one
point
influences
is,
the
we're
other.
here in this room, right? We're
Yes.
trying to do good for the community, for our
Absolutely.
users. I run a cryptocurrency exchange, so I try to do good for my users. So let us band together, education, education, education. And I always say, not your keys, not your crypto. Don't keep your crypto on my exchange. You exchange, take it off. It's
Absolutely.
yours. Education, education, education. And let us all get together, protect those users, educate them,
Absolutely.
and protect them. I would not put my trust on the regulators. Just I won't.
So that's a very good point on education. Gabrielle and a few of us mentioned it. One of the things I'm doing, and Kevin knows about this as well, is it's nice to have forums like this, but I've taken a leap of faith, and I've said we are not, as a community, sending the message out and educating the real masses. So 2 weeks ago, I signed a deal with a very, very big media company. They have 200 million viewership on their media. Now, this is what people watch on their mobiles. So we are doing a special crypto and blockchain channel with multiple episodes, and I'm going around interviewing some big people and friends I have in the industry. I've already done the Brox and Tone and various other people, but I'm going to go out and search real big, powerful users and powerful evangelists and powerful message contributors for this channel to try and disrupt the people's view to say, hang on, crypto and blockchain is the way forward. Please learn some basics and look out for this and look out for that. So that's my contribution back, free.
Yeah, thank you for that. Yeah, we got one more. Let's just
Check.
get him, and then we're running out of time. We're good. We could go all day.
Keep going through.
Right.
You want to keep
Going
going?
to the pirates.
Yeah.
Go for it, Kev.
You guys want
One more question.
You want us to just finish
Another
this off
question.
today?
My question is, are we not seeing an emergence of digital currencies as regulation vehicles? And I'll just give it a little background. My father founded a banking software company in 1968, prior to the regulation of banks and banking software. What evolved was a regulatory regime post-technology. So, someone mentioned a fire. Well, there was recently a fire in the United Kingdom, in London, a tower. It was discovered later that they already had the regulations for the materials, and they just weren't applied. So when we ask ourselves in the future, are the regulators, are they doing a good enough job? Maybe the paradigm that's emerging is where we as people are choosing the regulatory standard that we want applied based upon the performance of the regulator. And so thus, in this new digital prerogative world, we're standing up to the challenge of regulation by establishing new regulatory standards and doing this in an innovative way.
So
what he's basically speaking about is self-regulation to an aspect. And over the years, one of the more important things that we saw come out of the cryptocurrency industry was self-regulation. Things along the lines of proof of solvency of exchanges. Irina, you mentioned take your coins off the exchange. You don't own your coins. You don't hold the private keys. You don't own the coins. That didn't come about from today. That came about from years of lessons that the industry would have taught itself and taught each other. Our industry is very much driven by self-regulation. A lot of the standards that you see on exchanges today aren't regulatory-based standards. They're self-driven. And that's where we have seen the most come out of the industry from a protectionist perspective. And I think that's very important to note that one of the very cool things about this industry is that the community drives the self-regulation policies and procedures that mandate the operational policies of our provisions.
Look, let's end it there. And Jason, you and I had a conversation with Jason a few times that crypto used to be fun. You know, blockchain tech used to be fun. And somewhere along the way, in the last 3 years, it lost its pizzazz because of this regulation talk. I do agree that a lot of it's self-regulated, and it hasn't been all that bad. Look at all the progress we've made. Look at where we've come to today. Just the announcement of something like Libra should be the catalyst for where we've come and where we're going to go. We're in a country and in a city where in just about a year's time, everything's going to be full blockchain. And closely following that, the capital. And it's amazing to see just for these specific examples that we have gone a long way. So self-regulated or regulated or anything in between, I think we should be proud of that as an industry, that where we've come and where we're going to go. So thank you to my panelists. Thank you to you guys for your time, and I appreciate everybody.